Hey everybody, welcome to April 7. Can you believe April 7? And we are on the April 7th edition of Money and Politics, and we're going to be talking about something a bit different today. We always start off with our look at Humble. And Humble, I spoke with my son today, my oldest son, and he made some great points. He's been following the OTC a lot longer than I have. As you know, I'm more of a traditional investor, and I've talked about how I generally stay away from penny stocks, but I've been easing into this, beginning with Humble and now with some others, and I'm going to be talking about another penny stock today. But my son made some great points. I'm going to interview him. I'm going to have him make his comments rather than me try to restate them about why Humble stock, he says, is kind of stuck right now and just kind of bouncing around. I thought he made some very good points. It's always frustrating when we want to see our favorite stock moving, and here today it's just down again. Question was it going to go back down below $3? It didn't quite make it. Who knows? Maybe tomorrow morning. Last time it did, my son bought some down there, and then it ran back up. So we'll see. What we do know is that we're going to have a lot of news coming up on Humble. I think it's going to be increasingly positive news over at least the next 6 months. We're going to be, I think, in the whole growth phase. And heretofore, we've been in the getting the business up and running stage, getting the ticker out, getting the different things. So I'm not going to belabor and go over all the things we generally have talked about time and again. I would say I have a new thing that I want to talk to you about. And speaking of my son, he called me up about 6 weeks ago or so and said, he bought this stock in mode. He goes, I bought 20,000 shares. I didn't know anything about it, but all right. So I went out and just bought 20,000 shares. And because I didn't know much about it, when it went up a bit, I sold 8,000 shares of INND. We've talked about it occasionally, but not much. And I took out, with those 8,000 shares, all of my original investment with a very modest gain. However, I am now today, I bought, as I put on Twitter, I went back in and bought another 13,000 shares to come up with 25,000. And by the way, I said that in one of our fellow investors in YouTube not YouTube, in Humble, one of my fellow investors said, well, I got 450,000 shares. So my 25 ain't nothing. But with my hesitancy on investing in the penny stocks, and we spoke about the one yesterday where it had fell 78%, and that was a primary reason why you have to be careful with these penny stocks. On the other hand, we know we can make decent money with them. And I am up in mode now. I don't have a substantial amount of money, but I'm up 72% between what I purchased earlier, and I was up marginally today. As you would expect, I wouldn't be up too much, although actually about 8% because it moved. But here's today's movement. And here's the thing that is coming to my attention. There was this on Twitter from the company. And as it says, INND will be making its official public announcement on April 11, 2021 regarding the InnerScope Hearing Technologies product launch with a Fortune 250 retailer. This will be the first of many for INND. And FYI, since it will be asked, yes, we are working to be current on filings. So that's, on one hand, both the good news and kind of the bad news. They are behind in filing their financial filings with the OTC. And as it said, yes, that was posted on April 5, that they look to be current on filings ASAP, whatever that means. Hopefully that means right away and not when we get to it. Folks, there's always a threat. There's always a high degree of risk in penny stocks. That's why I've always been very cautious about ever investing in them. But I think this InnerScope has some real potential. And the other thing is, there was an article that was put out on Yahoo today. And it mentions, by the way, that, as I have mentioned before, one of my dear friends is the financial journalist Jane King, who lives in New York, and she covers financial issues and has done, especially on YouTube, just an amazing array of interviews with leaders in various fields. And she recently interviewed Matthew Moore, the CEO of InnerScope Hearing. Here's a quote. Let me read. It's kind of a long quote, but it's going to get to the meat of this, why you might want to consider investing in this. From the interview Jane did with Matthew Moore, we made hearing easy, convenient, and affordable by giving millions of people access to direct-to-consumer hearing technology without the need to see a hearing care professional. Our recent launch of our app-controlled self-adjusting hearing aids using Apple iPhone and Google Android apps is 70% to 85% less costly than hearing aids fit in a traditional brick and mortar clinic by a hearing care professional. Given the new hearing aids over-the-counter law, which we expect to be enacted in the next few months, allowing O2C over-the-counter hearing aids to be sold in stores without seeing a hearing care professional, fits right into our current retail sales distribution plan. And Mr. Moore goes on to say, we believe we are well positioned with our online and in-store retail partners to grow the current market penetration and make a significant shift in purchasing hearing aids from the current professional sales and delivery model to direct-to-consumer model. So there you go. And what this means is, like with so many others in business, they came up with a different business model, a different distribution model. And what they are going to be doing, as he says in the earlier part of the quote, that they are going to have reduce the cost by 70 to 85% compared to the competition. As we have the aging of the baby boomers, there is a growing need for hearing aids. Now, there is competition in this field, and you see the ads. I don't remember the name of the company, actually, but the guy who's saying to his son saying, I love you, and the father doesn't hear it. The amazing thing is, a couple of years ago, I was at a Sam's store, and I walked over and talked to a guy just because I was kind of curious what he was doing. They were selling hearing aids. I was shocked when he said the hearing aids would cost in the area of $6,000. When you have spending in that kind of a price range, and maybe those are the Cadillacs of the hearing aid business, there's obviously room to reduce costs. And that is what we are seeing. And Intermode, INND, is one of those companies that is now, in that business. And as they said earlier here, they're going to be making an announcement with a Fortune 250 retailer on the 11th of April coming up. So we are going to have a catalyst just around the corner. That is actually on Sunday, which is a unique time to be making an announcement. But the current price on that, as you can see, is just under 4 cents. And earlier in the day, it was down to 3 cents and change. what is interesting is if you look back here, and this is what we see so often with penny stocks, and we see it with Humble. I mean, this was 0.0002 on January the 8th of this year. Can you imagine? One could have bought $1 million, a million shares, I should say, for next to nothing, and now have had, $40,000 in stock. It's impressive. It's impressive, and this goes to what the yin and the yang of investing in penny stocks. You have great opportunities, but buying penny stocks, as I've said before, is a bit like tap dancing through a minefield. So you have to be very careful of what you go into. A lot of these penny stocks, and a lot of the penny stocks that you who have made comments or asked me to look at, I've looked at them, and I often find that they are really just bad investments. And you need to be looking, folks, at not just a cheap stock, but does this have a compelling story? The compelling story behind any business is really what you have to follow. Irrespective of the price, it's the story. Why does this make sense? What are they doing differently that is going to add value and make them become worth more? It's the old story, if you make a better mousetrap, the world will beat a path to your door. Maybe that's what InnerScope is doing. They are at least doing something differently, and they're saying that we are going to be able to deliver quality product at a lower price, and we are lining up widespread distribution channels. So I think when you're putting money in, if you do put money in at this price, you're looking at 4 cents. It's already had a 52-week high of close to a dime, 0.098. And that obviously would have come, back here in the early part of February or so. If you just return back to where you were at 10 cents, you would have a substantial increase in the value of what you bought now. Is it a guarantee? Nothing is a guarantee. Everything comes with risks. And as I said to you before, when I made my money in Cisco, I put in $11,000, and 6 months later it was $9,000 in value. But then it went on a roll. So these are penny stocks. I am telling you, where I said the other day, I am not giving my blessing. In this case, I'm not guaranteeing you anything, but it went up 38% today. I had 12,000 shares. I bought another 13,000 shares. That was just under $500. If I knew it was a guarantee return, I wouldn't put in $500. I'd put in $50,000. I mean, it's always a risk, so you have to invest accordingly. I hope to have a comment, my son's comments on why he thinks we are not moving as much on on Humble just right now. When you're a dad and your son makes some very intelligent comments, you're both proud of him. But I was saying to him, I should be recording this conversation because you're making excellent points. And so I'm going to try to do that because I want you to be able to hear that. One other thing I'll say in closing. I always go longer. I always find one more thing to say. But this is certainly on the other end of the spectrum of investing. I have never been a big fan of Tesla over the years, but I will say, I think what I now know about what they're doing, both in the electric cars and what they're doing in electric storage, and what they're doing in battery development, I would say, folks, everyone ought to have a share, at least one share, of Tesla. And if you can't afford that, you might look at ARKK, which is Kathy Wood's ARK. I know last time I checked, Tesla was either the number one or number two investment. But if you can invest even have one share of Tesla, I think this could be over the years, the next 10, 20 years. This could be something that grows for a long, long time. And that's what I'll say in closing. I was just doing some research on it last night. Okay, folks, consider what we said today. We're going to consider other good companies as we go along. Go ahead and send your ideas. I like to hear your ideas. But please, when you do give, as I've said before, give me a little thumbnail sketch of why you think. If you were saying, I think you ought to look at this, I think it's good because X, Y, and Z. Kind of as I did today with InMode, or InnerScope, rather. Give me a little idea why you think. What are they doing differently? What are they doing better? Why will it grow? And if you can't say that, then you need to do a little more research yourself before you ask someone else to be doing it. But if you know the reasons why you think it's going to be growing, then give that to me as some guidance, and then I'll look to see if your theory holds water, all right? Sorry for going again longer than I intended, but it's always fun talking with you. Thanks so much. Don't forget to sign up if you haven't. Please give us a like, and if you think this will benefit friends and family, share the video. In the meantime, good investing, everyone, and we will see you tomorrow.